Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HAITONG UT interim report. HAITONG Unitrust International Financial Leasing Co., Limited, offers a diverse range of services to various industries. The company provides financial leasing and commercial factoring business, as well as advisory services for enterprises in different sectors. Its services include operating leasing commercial and vehicle financing aircraft, leasing financing of aircraft-related businesses, PPP project management, property management, logistics management, catering management, government outsourcing information. Consulting. The company serves industries such as advanced manufacturing, transportation, construction, culture and tourism, healthcare, and more. The skyrocketing stock price of HAITONG UT, a mystery unraveled. HAITONG UT stock price has seen an astonishing surge of 151.62% in the past year, leaving investors and analysts alike wondering what could be behind this remarkable increase. Despite a thorough analysis of recent news and financial reports, no clear catalyst for this drastic rise can be identified. Dividend discussions, governance changes, and interim financial reports have been topics of conversation, but none of these seem to point to the significant price surge mentioned. In fact, a market insight from January 2024 suggested that a strong share price rise was unlikely, indicating a period without substantial positive catalysts for such a drastic price increase. The mystery surrounding HAITONG UT stock price remains unsolved, leaving investors to speculate about what could be driving this remarkable growth. The primary drivers of revenue growth and decline are multifaceted. On the growth side, key factors include increased financing demand in emerging industries, implementation of new development initiatives, fintech innovation, and strategic allocation to optimize asset structure. Additionally, a focus on key industries, expansion into emerging sectors, and cultivation of specialized sectors have contributed to revenue growth. On the decline side, persistent geopolitical conflicts, trade protectionism, and global market volatility have negatively impacted revenue. Furthermore, decreased average yield, due to declining interest rates and intense competition for high-quality assets, has also led to a decline in revenue. Net income and profit margins. A shift in performance. The financial performance of a company has undergone a subtle change, with net income experiencing a decline of 3.4%. This decrease is juxtaposed against an increase in profit margins. Specifically, the profit margin before tax and provision rose by 1.42 percentage points to 45.6%. while the net profit margin increased by 1.95 percentage points to 23.75%. This divergence suggests that despite a reduction in overall earnings, the company's ability to retain profits has improved. The increase in profit margins indicates that the company is becoming more efficient in its operations and better at converting revenue into actual profit. However, the decline in net income highlights underlying challenges that need to be addressed to ensure sustained growth and profitability. The company is indeed generating positive operating cash flow. This is confirmed by multiple sources within the financial summary and supporting documentation. Key indicators include a total operating cash flow of RMB 2,811.3 million, page 27, positive operating cash flow of RMB 434.7 million, page 32. Net cash generated from operating activities totaling RMB 999.7 million, page 47. These figures demonstrate a consistent trend of positive operating cash flow in both 2024 and 2025, with no indication of negative cash flow or financial distress. The company's debt level and interest expenses have undergone significant changes. The total debt level has fluctuated, with a 3.4% increase from RMB 38,180.4 million to RMB 39,488.8 million on page 8, but then decreased by RMB 1,358,460 on page 102 and RMB 299,414 on page 103. However, the overall trend shows a slight decrease in debt level. On the other hand, interest expenses have significantly decreased by 21.8% from RMB 1,633.5 million in 2024 to RMB 1,278 million in 2025 across multiple pages, 25, 30, 31, and 32. This indicates a substantial reduction in the company's interest expenses over the past year. Management's outlook and strategy. the company's management is optimistic about the future, citing China's economic recovery as a favorable factor for development. To capitalize on this growth, they plan to continue investing in strategic sectors such as digital finance, computing power, and AI. They also aim to strengthen their presence in green industries, including low-carbon and advanced manufacturing. Their strategy focuses on national priorities, integrating with the Guotai Haidong Securities Group corporate client system, and promoting industrial transformation. To adapt to a complex external environment, they will optimize asset allocation and serve the real economy. Additionally, they plan to leverage resources to develop industry advantages, control credit risk, and implement strategic allocations to drive asset structure optimization. Key areas of focus include supporting national strategy and the real economy, innovating financing methods, and optimizing liability structures. They also aim to advance the development of 5 major sectors of finance and concentrate efforts on strengthening presence in specialized segments. Overall, management is committed to driving growth while prioritizing sustainability and green energy initiatives. The company has a history of paying dividends to its shareholders. In fact, it has paid an interim dividend amounting to RMB 345,882,600, with a rate of RMB 0.42 per 10 shares. This indicates that the company is committed to rewarding its investors through regular dividend payments. That concludes the financial summary for HAITONG UT. Feel free to comment below, and I will be happy to answer them when possible.